Well, thank God it's Monday. It's time to do business. 25 minutes is what we have here in Business Incorporated. And here's what we have prepared for you. In Nigeria, that 2 million barrel target of crude production is getting threatened. We discussed that. In Africa, well, funds are drying up. Just $174 million has been raised. And Uganda retains its NPR. Good afternoon, I'm Ini John Mekwa. Let's do business. Starting from the global space, oil prices were stable on Monday after the United States and Iran pledged to continue indirect talks, easing oil supply fears. But India, stepping away from Russian oil purchases, is giving prices a floor, retracing earlier losses. And so we see for this afternoon, Brent is just slightly up, 0.04%. The price is $68.08 a barrel. For WTI, is also up 0.06% at $63.60 a barrel. And then also, after those talks that started on Friday and more talks expected, Brent and WTI fell more than 3% and 2% respectively last week. Their first decline in 7 weeks as tensions eased amid a broader market sell-off led by equities. However, the foreign minister of Iran said the country will strike U.S. bases in the Middle East if it is attacked by U.S. forces. Let's talk about what all of this is doing to Nigeria, which we know has this mainstay in the oil and gas for its revenue, national revenue, that is. And then Nigeria, of course, has that target of 2 million barrels per day for 2026. However, recently there's been talks about the Petroleum Industry Act and issues coming around that may threaten this target. Let's have this conversation now with Liberos Oshoma. He's a lawyer and public affairs analyst. Mr. Oshoma, good afternoon and welcome to the program. Good afternoon, Mr. Oshoma. Can you hear me?
Yes, I can hear you. Good afternoon.
Great.
Can you hear me?
Yes, I can hear you now. So Nigeria has a target of 2 million barrels. Last year, we couldn't mostly meet up even with the OPEC quota. Now we have 2 million. But now the threat coming from the PIA, which is supposed to be helping matters, is also being considered and of great concern. What have you heard about this? What should we be doing about this?
Yeah, thank you very much. Ordinarily, the PIA was meant to strengthen the operations of our marginal feeds and then also operations of the sector generally. But like typical of our businesses, you find out that the human factor, and in some cases, when I mean human factor, some of the litigations as regards the operations of the PIA and also the regulators, the inability of the regulators to enforce law strictly. It also will act, if not properly handled, will act as a inhibition to the operations of the PIA. And I say this advisedly because recently, you remember the case of Eurafric and the Petrolan Energy Limited, and the decisions of the Federal High Court in that matter. I think that the regulator ought to have put its foot, strongly down, before all of that happened. Because if you remember, before some of these licenses were reissued, some of the feeds had been inactive for a very long time. Some for 7 years, some for 5 years, especially that operated by the Eurofeed, and then before the PIA came into being, some of these licenses were revoked. And immediately the PIA came into being, Section 96 spells out clearly also how, some of these licenses, like the OML can be revoked, including OPL. But in as far as that case is concerned, though the license was revoked before the coming into effect of the PIA, yet the parties went to court gave a judgment, and then it was as if the regulator, the NUPRC was, footy-pussy, and they allowed all of that. And that will further inhibit investment in that sector. And I say this, a situation where an operator is given a license and the feed is inactive for years. And then you now have an operator, the petroleum, who had been, sweating the feed to, in the last 1 year, has sweated the feed to about 150,000 barrels for two wells and another well in the offing. And yet you have, such, a litigation hanging over their head. What the operators or the regulators should have done would have been to call parties to a round table and resolve the matter timely, so as to encourage, the target that the federal government has set. In the absence of that, certainly, people wouldn't want to invest in those feeds that were revoked.
And just at the just concluded energy summit in Abuja, the minister was very proud of the fact that, or at least the claims that we have now started attracting more foreign investment funding capital into the oil and gas space. So I wonder, when you place that side by side with this, some of this judiciary, well, not very good sentiment, I wonder what that would do to us and what that would do to that claim by the minister.
Yeah, we need to understand that an environment where litigation are drawbacks, no matter how lucrative investment in those areas are, no business would want to fully invest in that. That's why when the minister, I listened to the minister's speech, and why the minister is happy that investors are interested in coming to invest in the sectors, and some of these investments are yielding result. And one of such investment that is yielding result is the well by Petroland. Like I said, the well that was redundant for 40 years, and all of a sudden, within 1 year, it's been sweated to a 150,000 barrel. So, but then what needs to be done? You remember, El-Rufai once said that when he became the minister for the FCT, he knew that certain decisions were going to be taken. So there must be understanding between the agencies and the judiciary. Also, what the AFCC does, organize trainings for the judiciary most times to understand their modus operandi, and then so understand the technicalities and intricacies of the applications of their laws. So I think the NUPRC and the minister also need to organize such seminars, collaboration between the Ministry of Petroleum and Natural Resources and Gas, and then the judiciary, so that people or some of these judges would understand the intricacies. Because even if you look at Section 99 that the High Court hinges judgment on, Section 99 talks about an operator and a default operator. Section 96 specifically talks about where the awardee had not been paying royalty. In this case, royalty for a long time was not paid to the federal government, and it was like the asset was redundant. So what the government need to do in that stead is what they did, to have revoked that license even before the coming into effect of the PIA. But like I said, there are so many, the PIA is a novel piece of legislature that even some courts don't even understand. So there's need for that synergy, that collaboration, lectures and seminars, so that there'll be more understanding. That will also deepen and encourage the investment in that sector and help the federal government to meet its target. Otherwise, investors are going to come, and with these kind of challenges, they are certainly going to, take a backtrack.
Now, Mr. Shoma, so you think it's the lack of adequate knowledge and not sentiments or, some selfish gains that's informing all of this?
Yes, I think that, in most cases, interpretation, depending on, like we say, depending on the chancellor's foot, depending on the mind of the court. If the mind of the court is broad, then certainly interpretation will be very broad. But if the mind of the court is narrow, that takes us to understanding, then that interpretation will be narrow. So, and then also coupled with selfishness that we have in our system. So that's why the judiciary at every point needs to understand that decisions such as this will also limit the investment in the oil and gas sector.
All right. Thank you so much, Mr. Liberal Soshoma, a lawyer and public affairs analyst.
My pleasure. Thank you, Ini.
Let's move on now away from the oil and gas space. We see spot gold prices climb to hold above $5,000 per ounce, supported by weaker dollar as a slate of U.S. economic reports scheduled for this week brought investors' focus back to the trajectory of interest rates. We shared some of those expectations for the week earlier today. So spot gold is up 0.79%. $5,019 per ounce. Spot silver recovered very well, 3.50% in the green, $79.59. Platinum is, however, on the flip side, 2.78% in the red, shed off there, $2,040.60. Palladium, almost 3% down at $1,690.50. Copper still remains in the red from what we had on Friday, hasn't been lifted yet at $5.849 per ounce. And away from the metals market now, African startups raised $174 million in January 2026 from disclosed deals of $100,000 and above. This according to data from Africa, the Big Deal. It's a platform that tracks startup funding across the continent. The figure marks a significant slowdown compared with $276 million that was raised in January 2025 and falls below $263 million monthly average recorded over the past year, despite remaining higher than funding levels in January 2023, which was at $106 million, and January 2024, which was just at $85 million. The data highlights growing caution among investors, especially when considering the volume of deals. Meanwhile, Egypt continues to rank among Africa's most attractive capital markets, with its expanding financial debt and strong liquidity drawing both domestic and foreign investors. The country's stock exchange has benefited from ongoing reforms to improve regulatory frameworks and increased listing, which have strengthened confidence in the market. Analysts are saying that Egypt's diversified investor base and growing participation in equities and debt instruments are positioning it as a key destination for capital mobilization across the continent. In Uganda, that bank has retained its benchmark central bank rate at 9.75%, maintaining its to accommodate monetary policy stance amid a stable inflation outlook. The decision was announced by the governor of the Bank of Uganda following the latest monetary policy review, and the move reflects the central bank's confidence that current policy settings are sufficient to support economic activity while keeping inflation anchored around its medium-term targets. And still with Uganda, the leaders there are talking with the leaders in Tanzania, and they've held high-level bilateral talks to reinforce diplomatic relations and accelerate joint development initiatives. Discussions are centered on expanding trade corridors, improving transport links, strengthening energy cooperation, and enhancing border security. Both sides reaffirmed their commitment to the East African community's integration agenda, and they pledged to address non-tariff barriers that slow the movement of goods and people across borders. Away from there now, we head to West Africa, where Ghana is grappling with a backlog of roughly 50,000 tons of unsold cocoa stored at its ports. This is according to industry regulator. They say weaker international demand and pricing concerns have slowed exports. The development is raising pressure on the country's cocoa sector, which is a major source of foreign exchange and rural employment. Authorities are working to secure new buyers and stabilize supply chains while managing storage and quality risks associated with prolonged stockpiling. Let's look at the markets now. Intraday numbers. Nigeria is still glowing that investors are still bringing in money to the market. For intraday today, sustaining that new record it hit on Friday, the NGX has its all share at 171,890.50. It's gone up 0.09%. For Johannesburg, it's on the flip side intraday at 119,557.60. And then in Egypt, in spite of that good news that we saw, that it's one of the attractive or most attractive destination on the continent when it comes to the capital market, for this afternoon, it's down in the red, 0.15%, 49,960.25. Nairobi closed on Friday positive, and congratulations to Nairobi Stock Exchange. We see that they've crossed over. I mean, we started following this market when it was less than 100, and now we see it at 200. We should celebrate, you know, with Nairobi Stock Exchange there, 202.73. Moving outside Africa to the Middle East, we see a mixed color for intraday. Dubai is positive, very positive, 1.25%, 6,774.33. Abu Dhabi is also positive, more than 0.5% at 10,629.40. In Saudi Arabia, it's negative, is the low negative we have from that region. The Tadawul has lost 0.53% at intraday, 11,157.448, and Qatar is positive, 0.76 in the green, 11,502.01. We move to the United States to look at what's going on there. We see futures notch lower as investors are waiting those critical data we're expecting this week, quite a lot of them, more than a handful, following a volatile week that ended with the Dow Jones average. So we see the Dow, this for early trade of the futures is in the red, 0.18%. S&P is also down. NASDAQ is also down at the time, and these moves come after major averages bounced back on Friday, following sizable losses suffered earlier in the week. Bitcoin, of course, we know, also plunged, so I guess. But let's see what's going on in Asia at the close of their trade. There we see from Nikkei to the Kospi and to Hang Seng, they hit record highs. For instance, Japan stocks jumped to a record high, leading gains in the region after Prime Minister Takaichi won that landmark victory that has left a lot of people jittery for about 2 weeks now. So congratulations to Prime Minister. And of course, that's reflecting in the markets right there. Nikkei jumped for the first time past 57,000, but it's retreated a bit there, pairing gains at the close at 3.8, while topics also notch higher. So everybody is happy that Prime Minister Takaichi won that election and is back. But let's find out what investors in Europe think about this and how they're reacting. Of course, the talks between the United States and Iran is also on the table. We have Chiponda Chimbelu joining us with this. Hi, Chip. Good afternoon. What's going on in the markets?
Gains right now, and before in today's session they were really tracking that global equity rebound that we've seen in Asia and also of course in the US markets on Friday. Now the Pan-European Stock 600 is only up right now at 0.18% after trading higher earlier, and that's of course because the tech sector is recovering as some concerns about investment in AI subside, at least for today. And here in Germany the DAX is slightly higher at 0.4%. And that is mostly because of defense stocks. You mentioned that earlier, the shares of defense companies are gaining because of a pause in US-Iran talks. So that is, of course, something that investors have been keeping an eye on. And of course, the expectation, though, in trading is that we will get more volatility probably this week, as we've seen in the last couple of sessions. Now, companies, of course, expected to report earnings this week include Mercedes-Benz, Siemens, and Commerzbank. So let's see what the week brings.
Yeah, we'll certainly see what it brings, especially connected to the talks. But we're back to talking about regulating social media for children, for adults, and how this can be enforced. What's the latest on this?
Well, Ini, there are many discussions going on around banning social media for children in Europe. And just last week, Spain's Prime Minister Pedro Sanchez vowed to protect children from what he called the digital Wild West. Now, that was, of course, just days after French lawmakers voted to ban social media for children under the age of 15. Now, Spain's Prime Minister Ini says his country has joined a group of 5 European countries, the Coalition of the Digitally Willing, and that these countries would be discussing regulating social media across their borders. And of course, Elon Musk has already responded. He said that the Spanish PM's plans to ban social media for children make him a tyrant and a traitor to the people of Spain. And then, of course, the founder of the messaging platform Telegram, Pavel Durov, has also been critical, calling the plans, steps toward total control. But what we are, of course, seeing here in Europe is increasing frustration at social media firms. And however, an EU-wide ban is still unlikely.
Yeah. So what's wrong? What's the bone of contention having the EU come together to agree on this ban?
Well, Ini, we have seen the European Commission President Ursula von der Leyen express support for an EU-wide age limit for social media use, but there are doubts about whether such, an initiative could actually work and be feasible, because there are questions about age verification, whether it would be able to work without compromising privacy. And also, on top of that, despite having some of the world's toughest tech laws, which we regularly talk about, there are doubts about whether the EU being willing to confront US tech firms right now. Now, that is because, of course, the Trump administration is critical of the bloc's efforts to regulate tech. So what we may see more of are more EU countries pushing for such bans on their own. And we already have such a ban, not a ban really, but an initiative here in Germany where children between 13 and 16 need their parents' consent to be able to use social media. And in Italy, it's children under 14 needing their parental consent to open social media accounts. So there are efforts at national levels. And the Spanish PM, of course, did say the countries in the coalition of the digitally willing would be meeting soon to discuss the ban on social media for children in their nations. So we will see maybe those country bans take more effect rather than an EU-wide ban.
Yeah, well, I guess apart from the country ban, parents will just have to ensure that their children are safe and find ways to go around it, whether there's a country ban or the region-wide ban. Parents just have to take care of their children first.
Yes, that's something that we should hope.
All right, thank you so much, Chip. Enjoy the rest of your day.
Likewise.
Now let's see what's happening in crypto. Already mentioned how it's a very red BTC crypto market. BTC, of course, bears the biggest brunt of it. So almost 2.5% of the price of Bitcoin has been chipped off in 24 hours. We saw it struggle and get back to 70 on Friday, but apparently that's lost now. It's 69,170.69 after it was down almost 2.5% in 24 hours. This is Ethereum that used to be over $4,000. So it's down. It's $2,037.59 for Ethereum. And the talks and so much uncertainty. So while we see investors perhaps taking hedge, taking a kind of relief with the metals, where the metal space is, because of the uncertainty, first of all, with the Iran-US talks. In fact, some people have said that some of the crypto investors have also moved to the metals market, and that's why we see gold really going up in spite of some drawbacks and pullbacks. But we saw it today, we saw it up there. So, it's still a very red market. This is almost how we left it on Friday, all through the weekend and nights too. So whether it's an opportunity for investors to come on and buy the dip or not, you want to ask yourself, what kind of investor are you? How long are you willing to hold on for before you get on board the crypto at this time? Looking at the headlines, we see 6 people have been detained after a French magistrate and her mother were abducted in a crypto ransom plot, intensifying concerns over a surge in violent wretch attacks, is what they call it in France. And the French police have reportedly arrested 6 people, including a minor, over the kidnapping of a 35-year-old magistrate and her mother, who's 67-year-old, in a cryptocurrency-linked ransom plot targeting the magistrate's partner, who is a crypto entrepreneur. So there you have it, a form of revenge, I guess, and getting back at this crypto entrepreneur there. Another top story is from India. Crypto investors' persistent outcry and the loss of billions in crypto trading volume to offshore platforms in recent years. India is now standing firm on its decision to maintain the punitive 30% flat tax and 1% tax deducted at source rates imposed in February 2022. And since the enactment of India's broad crypto tax framework, local investors have pressured the government to abolish or at the very least reduce the 30% tax on gains from crypto transactions that have crippled domestic exchanges. However, their cries fell on deaf ears as Finance Minister recently announced during the budget 2026-2027 presentation that it will maintain its tax regime. I wonder what that can do to the domestic crypto markets over there in India. And then in South Korea, authorities have launched investigations into a major cryptocurrency exchange after a promotional error mistakenly credited users. This story came out over the weekend. They credited users with over $40 billion worth of Bitcoin, exposing potential weaknesses in exchange systems and prompting calls for tougher oversight. The error occurred during a weekend promotion when users were meant to receive small cash rewards, but instead they were credited with large quantities of Bitcoin. I wonder how many of that will be returned to them. But that's in South Korea, and the probe is on to deal with that and correct it. And that's it on Business Incorporated. Today, it's Monday. It's a new week, so we still have a lot of rounds to go. But remember, you can always watch our programs, Business Morning, Business Incorporated, on our YouTube channel here on Channels Television, and you'll be glad you did. I'm John McCall. See you tonight at 10. See how the market closes. Bye-bye.